For more on this, let me bring in Angelo Zino. He's a senior industry analyst for CFRA Research. And Tripp Mickle is an Apple reporter for the Wall Street Journal. Welcome to you both. Angelo, I just want to start with you. I was frankly surprised that people shrugged off the slow growth in services. I mean, this is where Apple is betting the future of the company. Why isn't the street more fazed by this?
Yeah, I mean, I think, first off, Apple gave some good excuses on why the number was 13%, right? I mean, they kind of tied it partly to Forex as well as some one-time, positive numbers on the prior year ago numbers. So, all in all, you're looking closer to 18%. That being said, when we look at the actual quarter, the one big disappointment to us was services. We did expect a slightly better number. Yeah. But that being said, I think investors are looking towards the potential service offerings later in the year and the potential acceleration out of that business. Right.
So we have the Apple Card coming apparently any day now, Apple Arcade, the gaming platform, Apple TV Plus, Tripp. Same question to you on services. As you noted, this was the slowest increase since 2015. Okay, so if we say it was 18% stripping out those factors that Angelo mentioned, this is still supposed to be the future of the company. Is it a problem that it didn't grow more quickly?
Well, I think this is one of those big open questions that analysts have been wrestling with and investors have been wrestling with for a while, and that is how strong is the correlation between iPhone growth or iPhone sales and services growth? And we're still sorting that out. And part of what's going on here, too, is there's a law of large numbers equation at play here. And we've seen services really grow tremendously over the past couple of years, and as a consequence of that, you're going to naturally see the percentage growth on a quarter-over-quarter basis and year-over-year basis change. Yeah,
I like that point, Angelo, about how tied it is to the hardware. I mean, ultimately, you use the hardware, I guess, as kind of a portal into Apple services for the most part. So anything you'd add to that? I know that after this came out, you still have a buy rating on the stock, $240 12-month price target. What do you expect for their services growth from here to look like?
Yeah, I mean, I think those were great points. And one thing I would add also is that, listen, I think services growth clearly is more tied to growth in the installed base. And we do think the installed base continues to grow, albeit at a decelerated pace given the whole law of averages. But that being said, I think paid subscribers is also an important number. And that continues to grow very nicely. We're looking at 420 million paid subscribers today, looking to grow that to about 500 million at some point next year. So the growth on the paid subscriber side of things is very good. And once you get consumers getting into becoming a paid subscriber, they're more inclined to spend even more on the services side of things. So our view is we're still looking for growth of about 15 to 18% in the next fiscal year because of what we're looking for on the installed side of things.
And Tripp, finally, the wearables numbers were jaw-dropping. I mean, they were astounding. So is this because of the Apple Watch? Is it the AirPods? Is it all of the above? And how is this going to change the way the company's financials look in the future?
It's a little bit of a black box, but certainly Apple was really, really smart to launch new AirPods in March and then also take up the price of those AirPods to $199 from $159. A lot of people are crediting that with really giving it some wearables momentum during this period that usually is a bit of a lackluster quarter for Apple, and that's part of the reason that everybody was so impressed with that number.